Hello and welcome back to the channel. My name is Jay. This is Mattress Money Investing. Today I'm going to talk about what we're going to talk about on this channel. I was asked by someone, what are you going to do? What are you going to talk about? So let's dive into that. This is a funny landing page that we have that summarizes a variety of the things that basically I do in my own investing. That's really what this channel is going to be about. I'm here to share my real experiences in alternative investing. First of all, self-directed IRAs. Let's take control of our investment money. A lot of folks think the 401k, investing in Wall Street, is the only thing you can do for retirement, but that's not true. In your IRAs and 401ks, the IRS allows you to invest in just about anything that's not a collectible, life insurance, or any type of self-dealing. It just happens to be that all the companies that process 401ks pretty much limit you to Wall Street. So we're going to talk about how you can take that money out of Wall Street and diversify into alternative investing. Typically the process is that you roll over to an IRA and transfer to a self-directed IRA custodian. For example, I use directed IRA. Next, you have to pick some alternative investments. Let's walk through a few of mine. First, we have Groundfloor. This is where you can invest in real estate. They support microloans, so you can diversify yourself across hundreds of secured real estate positions with as little as, I think, $10 per property. Come in here and diversify yourself into hundreds of different secured first position real estate notes, fix and flips, some new construction. And over the last year, I've made 11.8%. If, unfortunately, in the rare case someone does default, Groundfloor takes care of the foreclosure and getting your money back. So this is my net return for the past 1 year. So the last year of returns, 11.8%. You can see there's a downward trend here. This is my after-tax account, and what I'm doing right now is for my after-tax account, I want additional liquidity. And as a result, I'm actually switching from, in this account, from LROs to notes. I've put quite a lot in here right now. You can think of this as my CD replacement fund. And so if you look at their notes rates, you can see that they offer a variety of interest rates that are higher than you would likely find at your local bank. So we'll dive deeper into Groundfloor in a future episode. Next up, we have Percent.com. So Percent.com is also private debt lending, private money lending, and it's a little bit more of a potpourri. They have a large variety of opportunities that you can invest in, but you pretty much have to vet every deal yourself. Now, Percent.com will do some initial vetting. They share with you how each of these opportunities rate against their minimum recommended bar, and then you get to choose if and which of these you want to invest in. It could be a burger chain. I believe that's Fat Burger. Could be an orange factory in Mexico was one. Some of them may not align with your investor DNA. You may be supporting lawsuits. You may be supporting payday advance loans, that sort of thing. But if you find some that align with your investor DNA, these are typically higher interest loans. They may be based on the company cash flow. They could be based on assets. But anyway, you get the idea. These tend to be higher risk investments that, as a result, often do have higher returns. But if they default, then your overall returns may be reduced. So for example, my current investments, this is a higher risk, so I'm currently dipping my toe in the water, and the investments that I have, assuming that they all pay out and don't default, would yield a little over 17%, and currently I've made over $500 this year. It's an interesting platform. So again, private debt lending, something that you can probably do a little better than the market, but I should take a moment here to say I have no investment or legal credentials here. This is not investment advice. This is simply for education. I'm sharing what I do so that you can see options and real results. If you're curious about oil and gas investing, if you click here on Eckerd Enterprises, you land on Eckerd Enterprises ebook page. I happen to use Eckerd Enterprises. I've really enjoyed working with them. So you can walk through a variety of their ebooks on different investment opportunities and how you might process those. Here they talk about Roth conversions, 1031 exchanges, self-directed IRAs to invest in minerals. Then you can dip your toe into their videos. They actually have a lot more videos. They're really nice in that they provide hundreds of videos of education and live updates on your investments. I really enjoy working with Eckerd. And then for the folks who want to geek out, I do a lot of modeling. Here's my actual mineral performance as of June. After 13 months, the minerals that I have returned cumulative 12%. Since that's over 13 months, if you annualize that, they've yielded just a hair over 11%. That's one example. If you want to invest in oil and gas working interest, I have another model here where all the blue here is your inputs. Working interest makes more sense if you're in a higher tax bracket. So I put in some higher tax bracket information, and then you can see typically the return on an oil investment where they're doing the active drilling. You get most of the oil out in the first few years, and then it tapers off into a steady investment. But the nice thing is you typically get all of your capital back within the first 3 to 5 years. And so you get that cumulative 100% return. So you can rotate that capital. And then after that, you just get your long-term, your long tail of tax-advantaged distributions. And then I run different analyses. This one is if you do back-to-back investments for 6 years of that money compared to a 10% fixed investment. If you could find a 10% fixed investment, which there are a few that I'm evaluating. I compare cash value life insurance. Some people talk about infinite banking. Some people talk about cash value life insurance as the foundation of their investment portfolio and taking loans against that cash value life insurance. So here I'm comparing cash value life insurance against an alternative strategy, which is instead of using life insurance, simply taking loans against stock that you have in the market. And so this is where I was doing some modeling. I'm actually not done yet. When I make some more progress, we'll have an episode that dives into that. And finally, just a peek at, this was where I was trying to compare some different private investment options that I was evaluating and looking at their after-tax return. And so over here in this column, we have the projection of if I held these investments for, say, 5 years, what might the return be? So again, this is how I try to figure out what investments I might be selecting to put my money in. And importantly, really, we should all be considering the after-tax value of those investments. We really should be comparing with inflation as well. You can pretty much take all of these values on the right and subtract whatever you think inflation is going to be. So if you think inflation is going to be 3%, right? These are the compounded values. So if you think it's going to be 3% a year for the entire duration, you can just subtract 3 from all of these. And then you would have that. And then you would see municipal bonds earning 3.6. You're just earning 0.6. Cash value life insurance earning 5. Well, that's 5 because there's no tax, right? Qualified dividends, maybe 4.5%. after taxes, if you consider both the distributions as well as the growth in the equity value, that at least that I modeled here, again after taxes. We'll try to reserve the second half of the videos to really boring analysis like this. Actually, I like this analysis a lot. I enjoy it. It's how I make my determinations. Is this what I should or should not do? And then track the performance over time to see if it's delivering what I projected. So there you go. We'll try to have a little fun up front. You've seen my interesting sense of humor in some of the shorts. If you want to dive in and just see how my various investments are performing, see what I'm investing in just out of curiosity, here's the channel for you. So please do like and subscribe, and looking forward to some more episodes. Oh, separately, we're thinking about doing maybe some interviews, casual conversations, live streams.
Hi, thanks everyone for watching. Please like and subscribe to see more of this content. Appreciate it.